Hi guys, once again this is Alfred for Amassers.com. I want to run through this video really fast for me because we all know sometimes I can be a little verbose, but as I'm recording this video, it's pretty late at night and something's just happened with FX Master Gold. But before I get into this bad news um, and share my thoughts on that, I want to point out to you guys right here, I'm starting where I always start on my site, which is Amassers.com. And this is our fear monger indicator. It gives you a bird's eye view of what's happening in the crypto market. Right now, we can see 2 green, we can see 19 red from our scanner, and we can see we have just one bull here, which one bull plus, but this is almost the least you can have in order to have a greedy or aggressively up market. Um, this is tracking Bitcoin. It looks okay, but this signal here with Bitcoin and some alts is showing that some guys are starting to take profit off the table. I want to say before I go any further that on the 24th, these monthly contracts are going to expire. Since everybody's been long here for a while, you might see um, the market makers selling as the theta goes out for this month, and they need to clean some things off of the book. Okay, now that's all I had to talk about with that. Now we're going to talk about FX Master Gold, and I'm going to go through this pretty fast, guys. I'm sorry because I'm going fast. Um, let's talk about what happened. Let's talk about what I see. Let's talk about what I'm going to do going forward. But first, let's talk about this cold one that I got. I'm gonna pop this baby. Uh, Give me a little drinky drink. Excuse me. Okay. First thing I want to say is my apologies to anyone because I really try and vet something if I talk about something on my channel that's outside of something that me and my brother are working on. And I really thought these guys had it together as far as what a lot of people don't realize the most important part of this game, which is risk management. They they were not trading holidays. They just skipped President's Day. They were in and out pretty fast in all of their trades. But again, these are the things I look for because, like, in there's an old saying that a good trader thinks about how much money he or she can make, but a great trader thinks about how much money he or she can make and also how much money he or she can lose. And you can be good and you can get on a good streak. And I said this before in the other videos. Anytime you put capital into a trade, that capital, that money is at risk then. And I don't know. We're going to look at it. Let's do a deep dive into the charts. A lot of debate going on. Was this a rug? Was this just somebody getting overly confident? Um, Look, men lie, women lie, but numbers don't lie. Okay, so we're going to go through and I'm going to look at how they were doing this trade last week. Cause to um, a lot of people you won't see the difference, but I want to show you the difference. If you're ever planning to endeavor into a PAM account, the first thing I look at, for me, I'm not a financial advisor, okay, but I'm going to tell you what I look for. I look for risk management and I look for trading style. I may not know what strategy or whatever they're doing, but I will be able to know their risk management, is there something in place, and what's their style of trading. Okay, this is a snap of the account originally, and I thought this was a, a good style of trading. Here we got 01. That's me. I was testing. I was trying to see if does the broker do something ridiculous with leverage, etc. What does the price action look like? How do they react once I put a trade on? And so I just got in and got out really quick trading gold. I don't trade gold regularly, so you know, just a test to see what's happening on the broker. And I was waiting to have my account tied to this PAM. Let me touch on something here. In hindsight, it's 2020, but I should have noticed this before. You had to write someone to have them tie your account to a PAM account. And there's no section where you can tie your account to the PAM account and where you can untangle your account from a PAM account. I don't have a lot of experience with PAMs. This is my first PAM because I don't, I, I like to get my hands dirty myself. Um, but I didn't notice that, and I'm gonna explain to you why that's important. Somewhere in the span of these trades, if you see something that you don't like if you're aware of the trading style and you don't like it, you usually can untangle your account, revoke their privileges to copy trade with you. But I never saw that. When that wasn't there, that should have been a red flag for me. But hey, hindsight 2020. Now let's look at the prior trade that they done. Here's a gold trade. They got in on Valentine's Day, 11:07. They're in. Um, same same trade here. 11:08. These guys are out. Right here. They're out. Now this kind of made me think: are these guys trading off a minute chart, which I hate the idea of? But hey, if you're gonna be fast in and fast out, okay. And that's their first trade right there. They were up enough for this account to be up almost 1%. It was about a minute of exposure to the market, under a minute really, and they bagged their profits, closed the trade, and that made sense to me. They went back in, they bagged their profits, again about a minute exposure, and closed their trade. And hey, that made sense to me. You're at about 1.5% up on your account. Here's where I saw something and I wasn't too keen on it. 11:09, you're back again for a third trade. Now, you've already bagged more than, like, let's call it 1.5%. And then you decide to buy, and you decide to take your size up because position sizing is important. You go from 0.02 to 0.26. So you instantly decide, I'm going to use 13x my weight on this. And I mentioned this in the other video. It's like, I don't know about that. But hey, it worked for you. Now, if you're you're getting beginner's luck and you start to feel like Superman or whatever, then you'll get away with something, and it can happen to anybody. Get away with something, and then you'll do it again, and in the same session, done it again. This time it's 0.25. They closed this other trade profitably. This is what I mean by numbers don't lie. At this point, you're up another $33. Why are you still trading? That that didn't look that looked a little sus to me, And then you decide to expose capital, everyone's money, because we're all copying. Again, 0.25, whereas you started over here with 0.2. We're working, and I anticipate having the AUT bot out in 2 to 3 days. Okay, And one thing you'll notice is in the design of our bot, there's one trade a day. It's going to be one trade, and that's it. That's going to stop because a lot of the challenge is the challenge of over trading. Now, even there, essentially all of those, since they were 4 buys, that's all one trade, really. But no point did they just say, hey, you know what? I'm up and I'm going to stop at this point. When we release the AUT bot, there is a feature where we're going to have an arrow on the screen. That arrow is going to turn green. That is going to let you know if you are watching the bot. It's going to let you know that the bot's waiting for a target. But right now, a majority of what there is to be captured is already here and available. And you, as a human being, with complete control over your account. Someone asked me, a couple of people have written me and asked me, well, why don't you make a Pam account, Alfred? That's why. I I trust every user to have their best interests at heart, trading their own account on their own, and I want to provide a service, a valuable piece of software to assist you with that. I don't want to cripple you trying to um, manage everything for you. Now let's look at the trade. Now you saw what a super aggressive and kind of gave me a red flag looks like. Now let's talk about doomsday. Okay, the buy started here, 0.03. That's the size. And again, it's very important, position sizing. And then they took a loss. They closed the trade there, negative $20. And instead of stopping right there, they went back in again. Only this time, instead of 0.03, they done 0.73. So this is like more than 24 times the weight of the prior trade. And this is where they closed at a $507 loss. There's only 700. That was like $700 in my account. Okay, $759. Now, for some reason, and here's where the math comes in. Once you've drawn down this much, once you expose this much to the market, to risk, that's too much. And hey, you can, if it works, you'll leave a minute or two later and you'll feel like a superhero and you'll do the same shit again. Okay, later on. Now, I don't know if this is inexperience or whatever, but there's where the problem was right there. I don't know why that happened. I can't personally think of anything other than these guys were in with the broker, because it, see how the last trades we were adding to winning positions and closing out bagging positions. Now we're adding to a losing position and closing out and bagging losses. Then you do 0.24. This isn't because, okay, now they're calming down and deciding to use less leverage. This is because now you've already drained the account so much that that's probably all that you got the margin for. Then they do 0.09. Again, by the time you're at 0.09, unless you can somehow make 20x the move that you expected, there's no way you're going to break even. So this doesn't make any sense to me whatsoever unless you're just trying to drain the account. Then there's 0.04. Then there's 0.02. Okay, we're already at 5 trades. And all they're doing is adding to losses. There's not been one profitable trade here. And they're still going. There's 0.1. By the time you're at 0.1, it's literally impossible. You're not going to recover anything at this point because you already ate a trade that was 73 times this large. And then there's another 0.1, and then there's another 0.1, and then there's another 0.1. Until I suspect there's not even enough left in the account There's not enough margin to even put on a trade. That's 10 trades total. This is the time that they started right here. This is the time that these trades ended right here. That's 18 minutes. And again, guys, I'm very sorry I ate it on this one. Uh, where do I go from here? We're still working on releasing our bot, and I've stressed in this video some of the benefits of that. It's going to be your bot. You're going to have control over exiting the trade when you want to exit the trade. You're going to have control over how much are you willing to put on the trade. In fact, we capped even our goal at 8 standards, and there's a reason that I done that. I don't want someone setting up a giant honeypot for the counterparty to liquidate them. There's a reason that there's only one trade a day, because I don't want someone blowing up an account like this 10 consecutive trades in a day in 18 minutes. Okay, there's a reason that sometimes the bot won't give you a trade. There was no trade yesterday. I left the bot on and through um, it traded through President's Day, which is a federal holiday. But I left the bot on and it traded through it. It traded the next day. Yesterday there was no trade. And there's a reason for that. It's just important when we developed our strategy. It's just important to have reasons to take a trade and a strategy that executes trades. But there's also parts in the strategy that says, no, this is not where we're ready to um, extend some capital and inject it into the market for risk. If you had to hold my feet to the fire, I'd say, why the hell are you holding my feet to the fire, bro? But I really believed that this was just nefarious. There was no reason for all of a sudden for there to be 10 consecutive losses. Like, it looks like someone just draining an account. That's all I have, guys. Once again, this is Alfred for Amassers.com. The next video I'll be talking about our AUT bot and getting back to basics, which is covering our own opportunities.